Welcome to the Lone Arranger Radio Show. My name is Bruce Woodburn CrossCountry Mortgage, and yes, I am the Lone Arranger. Thanks for listening to me today. I really appreciate it. As you know, I am absolutely not a professional radio show, talk show host. I am a lender. I help people with mortgages, I help people refinance, help them purchase. I help them strategize on how to purchase properties. I've been in the business for 35 years, and I've helped well over 10,000 people accomplish their goal in accumulating wealth with purchasing real estate. And I'm there to help you as well. Hopefully, you'll find that you've got somebody on this end that's not only local, and I'm just a simple guy, I'm nobody special, but here's what I do. I want to do everything I can to help people understand that real estate is the easiest way to amass wealth. Much easier than just saving money in your 401k. You literally cannot save enough money to equal what you can make in real estate. I'll give you an example. My son, Chase, he's now 26. When he was 23, he got out of college, worked for a year, saved enough money to put a down payment on a house. Okay, he did it on his own, saved enough, did a 3% down conventional program. He used border income from his roommates to help him qualify. I mean, he had to piece it all together, but he did, and he worked hard at it. So he bought this home at 23 years old. I think it was like 330,000 bucks. So it was a squeeze. It was a tight squeeze for him, but he did it. 3 years later, almost $180,000 in equity. In 3 years, 180 grand. Now listen, not every property is going to bring that much equity. Some are going to bring more. Some might bring a little less. But how does a 26-year-old that makes 50 grand a year save 180,000? You can't do it. It's not possible, but you can do it with real estate, and you have to have a place to live anyway. And he still ended up having a couple of roommates that helped him make his mortgage payment. Pretty good. He got married mid-year last year, and I'm going to tell you something. The guy's living the dream. He really is living the dream. But I want to help your children, your grandchildren. I want to help you if you're renting. Maybe you're getting married and you want a place to call your own with you and your new wife or your new husband. Maybe you're going to have a baby. Maybe your family's expanding and you need more room. What's getting in your way? Let's talk about that. What is getting in your way from you moving forward to either purchase a home, or maybe you need to move up? Maybe you already own a home and you want a bigger home, better home. What's stopping you? You know what? There's only a couple things that are going to stop you. Maybe interest rates are bothering you right now. Maybe interest rates are what's going to keep you from moving forward. Maybe it just polarizes you because interest rates are much higher today than they have been in years past. Are you going to wait for interest rates to hit 3.5% again? Because it's never going to happen. Not in our lifetime. If we even hit 4% or 4.99, I'll be shocked. So here's the reality of it, folks. You can sit on the sidelines and complain about interest rates and not buy. Or you can jump in the market and purchase what you want. And when interest rates drop, probably at some point in the next 2 years, we should be back around 5.5%. Maybe 5.25% if we're lucky. But I don't see that happening anytime soon. As a matter of fact, I would anticipate that we could even see an increase in interest rates in the next year. Not a lot. I think we're going to pretty well stay where we are, but we could see a little bit of a bump. Why do I say that? Because I think Trump's going to bump the economy. That's going to stimulate the stock market. Stock market gets stimulated. Bond market gets the energy sucked out of it. And keep in mind, if you're my listeners, you know that mortgages are tied to the bond market. So it could cause interest rates to get worse if the bond market gets any worse than it is. I think we're going to pretty well stay where we are. Average interest rate right now across the country is running right around 7%. So you want to wait for it to get better? We saw 5 to 6% increase in homes just last year alone nationally. 5 to 6%. That's a lot. That's more than an average year. And to me, that was a soft year. It wasn't even a great year. 407-706-3313. That's my phone number. Anywhere from Orlando all the way up to Jacksonville, 407-706-3313. For all my Tampa Bay friends, all the way down to Cape Coral, you can call me on my Tampa line at 813-213-4009. That's 813-213-4009. Or you can get your application started at WeBringYouHome.com. Purchase, refinance, construction perm, renovation loans, reverse mortgages, home equity line of credit. You name it, I got it. FHA, VA, conventional, USDA 100% financing, down payment assistance. I've even got no down payment FHA loans. How do you like that? How do you like that? I've got physician loans for doctors. No money down, no PMI. All right. There's no reason for you not to get in the market. So here's the things that are keeping you from jumping in. You don't like the interest rates, so you're just going to wait it out. And you're going to wait it out. And by the time interest rates drop to even 5.5, the house that you were looking at will be $30,000, $40,000 more. That's right. And if you wait for rates to hit 5.5, it's likely going to jump up even more steeply. Because think about this, folks. You're living in fear. Fear never got anybody anywhere, but you're living in fear. And I understand that it's frightful when things are higher, your payment's higher than you'd like. I get it. It's no different for me than it is for you. But I will tell you something. Fear is what costs you money. And fear, false evidence appearing real. It's not real fear. It's what you perceive to be fear. The money that's made in real estate is generally made when other people aren't buying. Let's just take right after the recession. For those of you that remember the recession, okay? You remember that the mortgage industry really caused a huge problem when it came to mortgages. I mean, we really the mortgage industry was doing mortgages for people that should have never got a mortgage, and yet we gave them mortgages, and it caused a big problem. Well, what happened after that to housing? There were foreclosures, there were short sales because people got mortgages that never qualified. Well, that problem doesn't exist anymore. You actually have to qualify for a mortgage. How about that? It's the way it should be, called prudent underwriting. You got to meet a certain debt ratio. You got to have skin in the game. You got to have decent credit. So all of these things combined are going to keep us from having that problem. But we saw that housing dropped significantly after the recession. So let me ask you a question. Would it have been smart if you would have bought property between 2008 and 2015? Well, you probably answered the question correctly. It would have been one of the smartest moves you ever could have made. But we were all fearful. We were afraid. We saw our friends going bankrupt and foreclosures and short sales. So we were afraid. Do you know who wasn't afraid? Investors. That's when you saw all these iBuyer companies start to appearing, all these hedge funds buying up all these properties. Why? They knew it was short-lived. And boy, did they make a killing. They cleaned up. Because if you bought property anywhere between 2008 and 2015, within 5 to 7 years, you more than doubled your money. More than doubled. My biggest mistake in real estate is I did not buy property during that time period. My second biggest mistake was also in fear. So just before COVID, we didn't know COVID was coming. 2018, I sold 5 properties. Yeah, you heard me. If I would have just held on to them, I would have tripled my profits if I would have held on to them for 3 more years. 2 mistakes: not buying enough property because I was in fear, selling too many properties. I wasn't in fear when I sold the properties. I wanted to scrape some profits off, and I thought that I had done okay, and I did. I didn't lose money. I made a lot of money on them. But in hindsight, I wish I would have just held my properties and then start to peel properties off in retirement. That's what I should have done. And I would have had a lot more money. I bet you I would have had another million, maybe even $2 million. So let me help you with this, folks. Learn from my mistakes, learn from my successes, learn from my experiences. I'm here. Put me to the test. Come meet with me. Check out my references. Look at Google. Look at my Google reviews. Look at Zillow reviews. Look at Yelp reviews. Call my past clients. Call my builder reps. Call my realtors that send me business. Check me out. I'm the largest retail mortgage lender in the country. CrossCountry Mortgage, the biggest. Why? Because we do the best job. We're not advertising like Rocket Mortgage all over the place. Why are we the biggest? We don't advertise. I'm not spending $5 million a month, if that, probably more than like $10 million a month for Rocket Mortgage. I don't spend any money to do that. I am referral based. People like you come to me, then you refer your friends, and then your children, and then your coworkers. That's how I get my business. So how can I get to be the largest and it's referral based? People don't refer people that do a bad job. They refer people that they like and trust. So I'm offering you the opportunity, or I'm asking you for the opportunity to come to me. Allow me the opportunity to earn your business. I'll do everything I can to get you the best rate that's in the business. I'll do everything I can to make sure that I service you to a point where you are literally bragging to your friends that this guy does a great job. He keeps me informed. He answers my phone calls. He returns phone calls. He still meets with people in person. I listen. I'm nobody fancy. I don't do this. That my success is not because of me. My success is 100% because of the people that I surround myself with. It's my employees. It's Liz. It's Michelle. It's Jazzy. It's Monica. It's Jeanette. It's all of them. They're the ones that make the difference. Why? Because they care about you. They truly do care about you. And you'll know it when you talk to them. So you want to go to a big bank? Go for it. Go to a big bank. You'll get what you get. Their rates aren't as good. Their service isn't as good. They're not going to answer your call after hours or on the weekends when you need an updated pre-approval letter to make an offer on a property. That's why realtors use me, because they can get a hold of me when they need me the most, to ask questions, to get their clients pre-approved after hours on the weekends. It's what we do. My name's Bruce Woodburn. I'm the loan arranger. I've been in the mortgage business for 35 years. I've closed well over 10,000 loan transactions. I help people with refinance, purchases, home equity lines of credit, renovation loans, construction loans, reverse mortgages. You name it, I got it. And I want to do what I can to earn your trust and earn your business. Now, I don't do this show as a sales presentation, but I'm in business to help you. So I want you to know you can reach me. Go to webringyouhome.com. Now listen, when we get back, I got some really important things to talk about. What's going on in the economy, what's going on with interest rates, and how you can take advantage of today's market. But don't live in fear. Stay with me. I got some good stuff I'm going to share with you when I get back. I'll be right back.